Back to another episode with ByrdAdatto. Today we're going to be covering the PPP loans again. And I know it's a subject I feel like we've covered at least a dozen times between this and other webinars, but a lot has happened since the last time we came and talked with you guys. Part of that has to do with the fact, as we said, that the SBA has been slowly dripping out facts and answers and questions on their website. And then more importantly, on May 15th, they released the application you would have to use if you're going to ask for a loan forgiveness. And finally, I think it was last Friday or so, May 22nd, the SBA then finally released the second internal final rules. And most importantly about these, it had a lot of language as to how to deal with the forgiveness. And this is the piece that a lot of people were asking questions at from day one, which is, if I get this money, how do I get forgiven? And the most important thing to remember is there's two things that are happening here. And one is you have submitted your application. And now, number two, you have to submit a second application to ask for forgiveness. Now we have at least some better ideas of how that process is. And so instead of just Michael and I kind of walking through every single piece, we have a special guest who's going to be joining us you may have seen before. But Michael, can you please introduce our special guest?
Yeah, and I'll just say before I introduce our guest that these are the same rules that we've been saying are forthcoming for almost 2 months now in almost all of our prior episodes dealing with PPP. And probably had this guest with us on one of those episodes, if not multiple. This is Jessica Nunn with Skytale Group, our friend and advisor to many of our clients, and may now be a PPP guru. And
we will see. Thank you.
Welcome.
Thank you.
Well, welcome again. And so, again, we haven't scared you off yet, so we're happy to keep coming back. But this is going to be, one of the things that we're going to cover today is we're going to cover some highlights or high-level aspects. I don't know if you can ever call reviewing these documents highlights. We actually will be shooting a separate, Jessica will be joining us for a webinar we're doing for our clients, for Access Plus clients. There'll be more information out there, but today we want to cover some certain highlights that we want to hit on this. And Jessica, I think the very first one is the one that a lot of people have asked us over and over and over again. And for those not familiar with, is from the beginning of time, it appears the SBA has told us, hey, if you want to get forgiveness, 75% of the funds that you use need to be used for payroll. The other 25% have for certain limited areas that we're gonna not really worry about too much about right now. But let's address number one is when these interim rules came out, these new rules, did it address that? Did it clear up any insight for those who had questions on it?
So it did a little bit. And I will say that we were pleasantly surprised when we read the application that they didn't really hit us with any huge surprises. So a lot of people were thinking, oh, they're going to really revamp this and change it. They didn't. It was pretty much what we've been saying the whole time. So that's the first piece of good news. Secondly, as you mentioned, we still have that 75-25 ratio, which means that 75% must be spent on payroll costs, which were your wages, retirement plan, health insurance, those things, and then 25% on some other items. One thing it did clarify for us is that you don't have to spend 75% of the total loan. It's 75% of the part you want forgiven, right? So if you ended up spending, if your ratio didn't fall exactly within the 75-25, then what essentially you're going to do is say, okay, well, for what part of the loan in total equals a situation where 75% of that is payroll, right? And if it ends up where, you had some money over here where it didn't quite fit into the 75-25, then you're only going to get potential forgiveness on the ratio that exists for the 75-25. So we were a little nervous that out of the whole, like you literally could not even use the funds for anything out of 75-25, but it turns out just the forgivable piece has to have that ratio.
Which is awesome. And then on the secondary aspect of it, and then there are a lot of questions as to, I applied for the funds, I got the money, but now I have to use them up in an 8-week period. And so there are a lot of questions as to when does that really start and stop? And I think that to get the full forgiveness, was there any clarity that you learned again through this new second interim rules?
Yeah, so that 8-week is really a sticking point for a lot of your clients, a lot of our clients, right? Because some of our clients aren't even open during this 8-week period. Right. So, that's probably the most limiting factor. So we were watching that one very carefully. And it is clear that the 8 week starts when you get access to the funds. So when they're dispersed to you, typically that's the same day as when the bank releases the funds with, electronic deposits. So that's when your 8 week starts. And then you get truly 8 weeks after that to use the funds. Now, they did come up with a couple of flexible points on the payroll side of things. So on the payroll side of things, you can actually, if you think about the very end of your 8 weeks, they did say that as long as your payroll is incurred, you can count it, even if you don't pay it until your next scheduled payroll run. So if you think about it, that actually gives you a little bit longer than 8 weeks on payroll, because they didn't provide any guidance that you had to do that on the front end. So if your payroll hits day 2, then you count that payroll, right? Day 2 of your 50 some odd days. Then at the end, you can count those last few days, even if you don't run that payroll until after your 8 week period. That was helpful because we were recommending clients, you may have to run a special payroll to cut off right before that 8 weeks. It's going to be a pain. I'm sorry, you got to get those days, but now we know we don't have to do that. So that's really helpful. And then the other thing that was illustrated and provide a little bit more detail in the application was that there's this alternate 8 week covered period that you might have heard about. So for borrowers who have their payroll schedule on a biweekly payroll schedule, so not if you're like the 15th and the last day of the month, but if you're truly every 2 weeks or faster, we do have some clients that are still on a weekly schedule. They can actually start their 8 week clock on their first payroll run after their 8 weeks, just for payroll. Like you'll have a different set of 8 weeks for your payroll. So that's helpful and matches up nicely with someone's biweekly payroll schedule.
Awesome. And now, Michael, you and I have done several videos about explaining there was a lot of questions as to being audited by the SBA, and there was a safe harbor that a lot of people were looking to, that if you had under a certain amount of money, which is $2 million, that you couldn't, the SBA basically assumed, hey, you qualified to get these funds. It was necessary for you to get it, and therefore you're certified. But that has nothing to do with forgiveness. And one of the things I think a lot of people, this is the SBA comments, this was not a law, was a lot of people were looking for that information when the most recent interim rules were released. And there's a lot of question as to, does that still apply? And maybe you can jump in and kind of talk about that safe harbor and how that now, if you are asking forgiveness, how that's going to apply now.
Yeah, so it's, I guess the starting point is that that stated safe harbor was not in the interim final rules. So it's not crystal clear that, yes, if you borrowed under $2 million, you're deemed safe from audit. And that release a few weeks ago, probably close to a month ago now, was a relief and really changed some videos that we had done where we were really worried about it, yet still cautioned this is federal money. Be careful, still cross T's and dot I's. And the only thing I'll say is if you actually look at the application itself for forgiveness, they have a box to check to say, did you borrow over $2 million? Which to me can be interpreted that they're still looking at that from an audit perspective. I can't think of another reason why they would have a specific line item to indicate whether you and your affiliates borrowed more than $2 million. So I am hopeful that that safe harbor still applies despite the fact that it's not in the rules. I don't think our advice changes. Our advice is still, this is federal money. This is not something to play with, and you want to be super careful with the right documentation, both for why you borrow the money and for why you're applying for forgiveness.
Yeah, and I think that, and I'm glad you said that, because I think it's very important. We've talked about this in prior videos, which is documentation as to why you took the money, but more importantly, once you start using it, because a lot of people said, well, I don't have to worry about it anymore. I don't have to really document because I'm on that number. And I would not recommend that you just throw it out the window saying I'm totally safe, because one of the things I did notice in the interim final rules, they basically still can audit anyone if they want to. And so don't think that just because you're on that certain number that you're safe. You should follow as Michael kind of explained. And and Jessica, before we kind of sign out, I'd love any other thoughts that you had that something you saw in there that triggered that, like, hey, don't forget this. Is another good takeaway that you could give everyone before we leave.
Well, I would just say continue to stay organized. Continue to save your payroll records. Get a copy of your lease. You're going to need it. save your utility bills, just continue to be organized. One thing that we're telling people not to do is at the end of we have some clients whose 8-week period ends this week. I don't recommend that anyone rush to fill the application and get forgiveness for 2 reasons. Wait until after June 30th. The first reason is that, you're going to have to prove your FTE count, your employees that you've hired everyone back, and that safe harbor date is June 30th. So let's let that come and go and see how many employees you had as of June 30th. And then secondly, we've heard talks that they're still working to make changes to some of these things. So we want to let those unfold. So even if your 8-week period ends now, don't rush to get your application in with your bank. Let's hold off and make sure that we have all the information before we do that.
Yeah, I think what you just raised is a great point, Jessica, which is one of the takeaways that I want to make sure everyone understands is we're looking at what currently exists as far as law that's out there that we can tell you what SBA has said that how they're going to enforce it. We also understand, and we've seen a lot of comments out there about that Congress is currently thinking about making changes, as you just referenced, Jessica, as to extending it and doing other things with it. Until they pass it, that doesn't apply. But it is good to listen to and think about as far as other options that may occur, extending the 8 weeks, or especially for those clients of ours in states that still haven't fully opened or still can't bring their employees back for certain reasons. And Michael, I'd love to hear some of your takeaways too.
The law, it has passed the House, and the Senate's trying to rush it through today. So it has legs. It's not just a theory. And it would change the 8-week period, which is what we've been talking about. And so it's something to watch. We'll probably have another video. You will for sure hear about it if it passes, because it does change everything as far as people being able to fully use the funds and be forgiven for the funds, even if they have been closed due to COVID-19 after they received the PPP money.
And I can just say from the experience of having done these videos since mid-March, we have been very good about sending out information the day of, and then the Congress then changing all the rules that we just talked about.
Yes. That's my favorite, is going to bed at night thinking you've got it all figured out, and then you wake up the next day and it's all brand new.
So when that does happen, as Michael said, we will be out there explaining what we've learned since then. That's kind of one of the reasons why we did sit a little bit on before we actually spoke most recently on the forgiveness, because there was so much activity. But at least we can tell you what we know now, especially since some people coming as we know it, as currently defined the covered period, which may change by tomorrow. But anything else you guys want to add in before we leave for the day?
Yeah, no, we're all going to stay tuned to the next edition, right, to hear the new development.
That's right. So stay tuned for the next edition, and we're looking forward to speaking with you all the next time. Jessica, always love having you on this show.
Thank you.
Thank you.